It's Monday, May 6, 2024, and I'm Dave Sobel. 3 things to know today. The U.S. job market shows signs of cooling, yet remains strong post-pandemic. Microsoft's security overhaul, Satya Nadella champions security-first strategy in an employee memo, and Canalys forecasts 60% of PCs to be AI-capable by 2027 boosts opportunities. This is the business of tech. Today's episode is supported by CoreView. Your customers need your Microsoft 365 expertise, and CoreView has the only M365 management platform designed for MSPs. Manage hundreds of tenants, automate manual tasks, and monitor compliance, all while intelligently comparing to the baseline. With a no-code control approach, CoreView revolutionizes your Microsoft 365 administration. This powerful platform enables automatic reporting and remediation, ensuring optimal performance and security. The best part? You achieve this high level of service without the need for a large workforce, allowing you to focus on growing your business through efficiency. Want to know more? Visit coreview.com/MSP and find out more. Welcome to a new week, and with Monday, chance to look at market data. The job market in the U.S. is gradually cooling, but remains better than pre-pandemic levels. The Job Openings and Labor Turnover Survey indicates a gradual balancing of the job market with minimal layoffs as job openings and hires fell in March. Voluntary job quitting also decreased, suggesting less confidence among job seekers. Despite this, the ratio of job openings to unemployed workers remains higher than pre-pandemic levels, indicating a still tight labor market. Pay gains for job switchers continue to exceed those who stay in their current jobs, suggesting that pay gains may not normalize as expected. The Friday jobs report shows moderate and steady hiring in the labor market, easing fears of re-acceleration while indicating a healthy economy. Employers added 175,000 jobs in April, and the unemployment rate ticked up slightly to 3.9%. The report also highlights diminishing wage pressures and the potential for interest rate cuts by the Federal Reserve. This marks the 27th consecutive month with an unemployment rate below 4%, approaching a record period between 1951 and 1953. Slow job growth and rising unemployment are expected later in the year. The tech hiring market showed signs of recovery in April, with IT unemployment falling to 2.8%. Technology companies added nearly 4,300 workers, and there were 179,000 new job postings in tech. Despite a slight decrease in IT occupations across sectors, the trend of falling IT unemployment is expected to continue. IT spending is projected to reach $5.1 trillion this year, indicating strong demand for skilled IT workers. The Q1 Employment Cost Index showed a 1.2% increase in compensation, higher than expected. Public sector workers saw particularly high compensation growth, reflecting the catch-up effect from previous years. U.S. consumer confidence has fallen for the third consecutive month, reaching its lowest since mid-2022. The main factors contributing to the decline were concerns about elevated price levels, particularly for food and gas. Despite this, wages have grown in the first quarter, raising inflation concerns among investors. The U.S. Federal Reserve is expected to hold off on rate cuts due to stronger than expected inflation. Wealthy Americans continue to drive spending, contributing to ongoing inflation woes. The Small Business Administration released its annual report showing small businesses received $178 billion in federal contracts in fiscal year 23, exceeding the goal of 23% by awarding 28.4% of federal contract dollars to small businesses. This represents a $15.7 billion increase from the previous year and supports over 1 million jobs in various industries. Embedded in an opinion piece in the Washington Post was some data valuable here. The U.S. is currently experiencing a productivity boom, with worker productivity growing at the fastest pace since the 1990s. This surge is not due to AI, but rather a post-pandemic surge in new business creation. In 2023, nearly 5.5 million applications for new businesses were counted, more than in any year in the past 2 decades. This trend is also contributing to more diverse entrepreneurial landscape. And the Russell 2000, that proxy for small businesses, surged last week. The index is up for the year, and the S&P 600 looks much the same. Why do we care? In story form, the job market is balancing while remaining tight, and tech even more so. Productivity is booming, attributed to more small businesses. Labor costs are up, though the workers in the U.S. are not particularly confident. The generally good news here is the growth in small businesses, distinctly more customers to serve. There's more money flowing into them via federal contracts, and overall data from the smaller public companies shows favorable conditions to small businesses. Now, it's not all sunshine and rainbows. The trend lines point to more of this. Businesses need to adapt to these conditions by enhancing their employee value propositions to attract and retain talent, particularly in competitive sectors like technology. Furthermore, they should be prepared for potentially higher labor costs and consider this in their pricing strategies and profit margin expectations. I've previously reported how Microsoft is under public pressure about security. Well, they've responded. Microsoft CEO Satya Nadella emphasizes prioritizing security above all else in a memo to employees. The company is overhauling its security processes after a series of high-profile attacks. The goals include secure design, default security, and secure operations, focusing on protecting identities, isolating production systems, securing networks, protecting engineering systems, monitoring and detecting threats, and accelerating response and remediation. Nadella urges employees not to make security trade-offs and highlights the need for technical and operational rigor in improving security. Microsoft's Secure Future initiative will focus on principles such as secure by design, secure by default, and secure operations. And the definitions: secure by design is security coming first when designing any product or service. Secure by default, security protections are enabled and enforced by default, requiring no extra effort and are not optional. Security operations, security controls, and monitoring will continuously be improved to meet current and future threats. The company will implement specific actions recommended by the Cyber Safety Review Board and hold the senior leadership team accountable for progress in meeting security plans and milestones. Now, why do we care? It's a plan, that's for sure. One does wonder why this wasn't the plan before, and I'll note that Bill Gates' trustworthy computing memo 22 years ago was both impactful to the messaging and surprisingly similar in theme. The phrase secure by default appears right in that 22-year-old memo. Now, this is the right message to deliver to customers. The recurrence of such initiatives might indicate previous measures were either insufficiently implemented or failed to keep pace with threats. It raises concerns about whether current strategies will effectively address these issues or if they too might fall short over time. The tech community and its customers should look for tangible changes in product design and operations that reflect these security priorities, rather than taking reassurances at face value. According to a study, Canalys predicts that 60% of PCs shipped by 2027 will be AI capable, creating new opportunities for managed services providers and the channel. AI PC vendors like HP, Lenovo, Dell, and Microsoft are emphasizing the role of AI-infused PCs in driving productivity, efficiency, and competitive advantages for businesses. According to a Gartner survey, 61% of organizations are evolving their data and analytics operating model due to the impact of disruptive AI technologies. Chief Data and Analytics Officers are making changes to support data-driven innovation and organizational agility, with data governance at the core. The survey also found that this data role is expanding its responsibilities, including managing data and analytics strategy and governance and being accountable for AI. However, budget constraints remain challenging, and data leaders must establish business outcome metrics to track data analytics value and gain executive buy-in. Why do we care? The opportunity for providers is in helping businesses navigate the complexity of upgrading to AI PCs and integrating AI-driven applications to enhance operations and deliver those tangible business outcomes. It's also in focusing on data management. Of the two, I'm much more interested in the data component. Data is the cornerstone of all advanced AI applications. Without high-quality, well-managed data, Even the most sophisticated AI-equipped PC is limited in its utility. Thus, providers focusing on data management are positioning themselves as essential partners in their clients' digital journeys. Looking to reach an audience of thousands of MSPs and IT service providers? Put your ad right here on the Business of Tech and be on the show that 64% of MSPs report having listened to. A recurring top 50 tech news podcast, there are affordable options for you to reach our audience, and we can support any budget. Podcast listeners are more engaged, have a higher level of brand retention, and are more willing to listen to ads here than any other avenues. Want to know more? There's information at mspradio.com/engage, including a button to book a time to talk. I'm looking forward to that discussion. Thanks for listening. While it's International No Diet Day, I'm going to focus instead and recognize National Nurses Day, as that one feels a lot more worth celebrating. Have a question you want answered? I take listener questions. Send them in, ideally as a voice memo or video, to question@mspradio.com. I answer listener questions live each week on our Wednesday live show on YouTube and LinkedIn. This week, 3 p.m. Eastern. Got a comment or a thought on a story? Put it in the comments if you're on YouTube, or reach out on LinkedIn if you're listening to the podcast. I'll talk to you again tomorrow. The Business of Tech is written and produced by me, Dave Sobel, under ethics guidelines posted at businessof.tech. If you like the content, please make sure to hit that like button, follow, or subscribe. It's free and easy and the best way to support the show and help us grow. You can also check out our Patreon, where you can join the Business of Tech community at patreon.com/MSPradio, or buy our Why Do We Care merch at businessof.tech. Finally, if you're interested in advertising on the show, visit mspradio.com/engage. Once again, thanks for listening to me, and I will talk to you again on our next episode of The Business of Tech.
Part of the MSP Radio Network.